Right, it's exactly 1 o'clock. Let's get this session started. As I said, if you have any questions, you're more than welcome to send that through to us. We're talking a little bit about today about the stop loss strategy or implementing a stop loss. And our example for today is going to be Nedbank. You'll see that's the chart that's currently showing on your screen. Also, before we get to that, we need to work through the idea of a stop loss. Now, we know that a stop loss is definitely one of the most important things that any investor can implement on his portfolio. If you're a newcomer to the markets, if you're an intermediate or even an advanced user in the markets, you would want to make use of a stop loss to ensure that you protect the bulk of your capital. That's ultimately the main aim of a stop loss, is protecting the bulk of your capital. Now, I've got a little poll that I want to run to see whom of you are currently using any form of a stop loss. You'll see on your screen, you can answer the question, whom of you are currently using any form of a stop loss. It's always great to see how many people are using it and whom of you are not using any form of a stop loss. So it's great to get your feedback on that as well. So the question is, do you currently use any form of a stop loss? You can just answer that. We've got a few more seconds before I'll show you the results for that to see how many of you are using the stop loss at this point in time. Right, so let's have a look. Let's see what you are saying. Let's see what is the final vote on what is and what is not. So currently we'll see that about 57% of you are saying yes, we are using currently a form of a stop loss, and 43% of you are saying that we're not using any form of a stop loss. Now, this is quite interesting because I hope for the 43% of you who are not using any form of a stop loss at this point in time, that I can convince you to make use of a stop loss in the future. The thing about a stop loss, as we said, it is there to protect you. Now, a study has been done. It says that it takes approximately 2 years for any given investor to get down to a certain game plan of how he's going to invest, how he's going to implement his objectives on his portfolio. And it's going to take you approximately 2 years to get down to the strategy that you will feel comfortable with, and that's also making you profits. Now, when you think about it, 2 years might seem like a long time, but it's actually quite substantially a low amount of years to gather the sufficient knowledge required to make successful trades. Now, yes, there are some of you, I know for a fact, that understand it and learned about the markets and fully understand how everything works in a few months. So it differs from person to person, but this was just based upon an average. Now, the reason why it takes about 2 years is because a lot of people struggle with things like their timing and their selection. That's actually one of the key things that a lot of people struggle with that starts off in the markets, is their timing. Now, timing is all about technical analysis, getting into the markets at the right time. We keep talking about this a lot over and over again when we do trend lines and patterns, when we do basic technical analysis. We're trying to figure out what is the right time to get into the market. When is the right time to get into the markets? So timing is the main aim at the end of the day. Now, when you're near into the market, you'll probably see that your timing is almost a little bit off sometimes, and that is all fine. And as I said, it takes approximately 2 years for the average investor to get that timing and selection criteria just right to where it's benefiting him almost every time he purchases shares. Now, the idea is to make a use of a stop loss so that if you do make a mistake in either your selection or your timing, or both of your selection and timing, to make sure that you are protected. That's the main aim of the stop loss. And that's why we said that it's so important that you do make use of it. Now, a lot of people tell me, Corné, but I mean, when I use a stop loss, it will only knock me out of the market and I will be losing. You know, it's not worthwhile for me to put in a stop loss. I would rather keep the high quality stock and let it do what it needs to do. The thing at the end of the day is if you're starting out with 5,000 Rand or 10,000 Rand, you probably want to protect that 5,000 to 10,000 Rand that you have in the beginning while you're still building up your profits, rather than throwing money into the water. So that's why it's so important to make use of a stop loss. Now, we particularly say that you should not be using a stop loss of more than 15%. So for those of you making notes, 15% is including your brokerage fees. Now, probably some of you are sitting there thinking, okay, what do you mean when you say brokerage fees and then the stop loss? I don't understand. Well, first of all, when you purchase a share at a specific price, you paid a certain unit cost price for that specific share. Now, that's obviously accounted for in your buying transaction and also in your selling transaction. Now, when you buy a share, you will pay a certain commission. Now, obviously, if your commissions work out, and in our lecture modules, we clearly state that your buying is about 2% and your selling is about 1%. So in total, your administrative costs is going to be in the region of about 3 to 4%. Now, if your administrative costs are in the region of about 3 to 4%, then obviously you can't use a 5% stop loss, because if the share moves down by 1%, you're out of that stock. Because remember, if you buy that share on your AppSub platform or on your Standard Bank platform, or whichever the case may be, that is already putting you in the negative. You're already paying that administrative cost when you buy that share. That's why when you purchase the share, you're already in the negative, right? Because you still need to make up for the administrative costs. So you need to be aware of the stop loss that you implement. There's a few things that you need to bear in mind, like the volatility of the stock, the sort of movements that happen within particular shares. That's why we look at the beta values of companies, but not just look at the beta, or the better layman's terms for beta is the volatility of the stock, but we're trying to figure out what is the cycle within the share. Now, shares have cycles. You can go and calculate that. You can go and see that, for instance, Nedbank on average goes up about 10 to 13% before it starts to turn, and go down about 7 to 8% before turning up again on average. So those are averages that we work on. Now, a lot of people say, but averages are not reliable. Averages might not be reliable, but it's a really, really good pointer that you can use to see whether or not something is going to happen or is about to happen within a particular stock. It's a really good indication. Now, once again, a lot of people would tend to see the market as being high risk, and they would always give their money to the unit trust, pension funds, and insurance companies. The odd, sad fact about a unit trust firm is that they underperform 7 out of the 10 indexes that they trade in, right? Now, why would you give your money to someone to underperform an index, right? That's not worth your while. You'd rather do it yourself. Now, one key thing that I did mention last week was that shares move up and down because of of people's perception of a specific stock and about the economy. Now, we see that perceptions when we look at the chart. The chart that you're currently looking at on your screen that you're seeing is a chart of Nedbank. And what you're seeing there is the perceptions, what people have of that particular stock. Now, what you need to remember is that you will not just buy one share. Diversification, not only is a stop loss important, but also do you need to diversify. Now, I'm not going to go into diversification because this is not the webinar for that, but diversification also plays an important role. But although you diversify in your portfolio to minimize the risk per share, you're obviously going to use a stop loss on all of them to make sure that you are protected. Now, the best way we describe it in our lecture material about what a stop loss is a stop loss is a little bit like your seat belt that you put on when you get into your car. You don't put on a seat belt because you expect to have an accident that day. If you thought that you're going to have an accident that day, you would not get into your car at all. A seat belt is there to protect you against the unexpected. When somebody jumps that traffic light and hits you, right? Now, stop loss strategy is the private investor's seatbelt in the share market. It's there to protect you against any sort of unexpected movements in the market. Now, a little thing about the stop loss and why you should sell out is because you would tend to sell out when you thought that your purchase time was wrong, so your timing was wrong. Or maybe you selected the wrong share to buy in the in the wrong time. You bought a share which in this season is going down because it might be a cyclical share, right? It moves based upon the seasons within a year, right? Now you bought it out of season and now the share prices are falling. Or maybe you got your timing right. You bought the share when it was at a peak. It was not in the bottom of the cycle. Now, a lot of people, when they start off within the market, they will tend to do both of those things. They will tend to select the wrong share, but not just select the wrong share, they'll even buy it at the wrong time when looking at the chart. Now, I know a lot of you are asking the question, how big should my stop loss be? And we did cover that. We said you should not have a stop loss of more than 15% in the beginning. And also you should not risk anything less than whatever the administrative fees are that you paid. So obviously, if the administrative costs for a specific transaction is let's say 3%, it doesn't help to use a 2% stop loss, because then you're going to sell the share just right after you bought it. So that's something that you also need to bear in mind. Now, one question that you need to ask yourself when determining a stop loss is, how much are you willing to risk? You need to ask yourself that. How much are you willing to risk? If you're telling me today, Corneille, I'm not willing to risk anything, I would like to tell you that the stock market is not for you. I would say that you need to take your money to the post office, but as luck would have it, not even the post office is a safe place to put your money. So what is the important fact that we should learn from this? A stop loss is important. Unfortunately, we will not always win. But what we're trying to do is not to win always. What we're trying to do is beat the odds. I would like to see a 7 out of 10 share performance. So 7 out of 10 of the shares that I have in my portfolio need to grow, or 8 out of 10 of the shares need to grow. But I want to be above the middle mark when creating a portfolio, when having a portfolio with a diversified amount of shares. I want to always see some room for growth. I'm expecting some losses in some of the shares. That's fine, but I've got stop losses to protect me. Now let's do the example. I've got this example up here for you. So I hope everybody can see the screen. I see that everyone can see this, so that's good. So I hope you can follow me. Well, first of all, the share that we're looking at is Nedbank. This is the stock that we're looking at this point in time on the webinar. And you'll see here that I've got a red line here at the bottom. And this is indicating to me what we call or refer to as a triple bottom. Right? You'll see it bounced off that level once, twice, 3 times, right? So in technical analysis, we say it takes 2 bounces of a specific level to say that, listen, that is a level, but in order to confirm that this is a support level, we wanted another bounce, and we had that 3rd bounce. Now, if you did notice it, a lot of people would have bought shares because this is a really good, strong indication that the share prices are about to go up, and yet it did. Now, let's say, for instance, we bought it, and the period where we're going to buy it is, let's say we bought it on the 17th of May of 2016. Now, I need you to bear with me, forget about the past or the present. Let's just look at where we're currently at right now. So we bought it at the 17th. Now, let's say, for instance, we're willing to risk 15%, including brokerage. So what we're willing to risk on the share is 15%, right? Now, if I'm saying 15%, then what I want to do is I want to actually make a reference of that on my chart. A lot of people don't do this. And on the new system, we have a bunch of fun drawing tools that you can use to make notes on your system, so that you know that at this point in time I bought the share and my stop loss is 15%. Now, the idea behind this is that you always want to move your stop loss upwards. Remember, a stop loss can never go down. So if I bought the share on the 17th of May of 2016, right, and let's say I paid 166.65 for that share, right? Now, if the share price from the day that I bought it continued to go down, I do not adjust my stop loss downwards. I keep my stop loss where I bought it from, and if the share price drops to 15%, I will sell it. I'm out of it because it hit my stop loss. There's a reason why you've got a stop loss, to protect the bulk of your capital. A lot of people think that they should be adjusting their stop losses downwards. It doesn't work like that. A stop loss can only move up. It can never move down. Right? So let's do this example. So let's say we bought the share. Now I need a calculator here, so let's just get a calculator. I'll open it up here. Right, so you'll need to have a calculator. Unfortunately, that's the important thing, to make sure that we do have this. Now, I do see, before we move on a little bit, I did get someone to let us know just now that their sound was not too great that's coming through. If everybody can just let me know that they can hear me loud and clear before I move on, that would be highly appreciated. You've got a little chat box in there. Just let me know, yay or nay, that you can hear me. That's really important to me, that you can hear me loud and clear. Right, so a lot of you coming through saying sound is fine. Sound is fine. Okay, right. So I do apologize. Just check your connection if possible. If you're seeing that there is some sort of a distortion, we do apologize for that. Also, do bear in mind the upload and download speed will also have an effect depending on your upload or download speed. But thank you for those of you letting know that the sound is fine. It's much appreciated. Right. So let's continue. So let's say we bought the share, and the time that we bought the share was 166.65. So what you do is you open up your calculator, you put in 166.65. Now what do we want to do? We want to calculate 15% of the 166. So what do? You deduct, you put the minus sign, and we say we want to deduct 15% from that. Now 15% of 166.65, if you want to round this down, it's actually 25 Rand, right? So if you actually want to round down this number, it works out at 25 bucks. Now that means that my stop loss, right, should be in the region of about 141.65. That's your initial stop, 141.65. So what do? You go down here, you select, and you can choose a horizontal line. So you go to this little section over here. You'll see it says select tool. It's next to the undo button. You click it, and what you do is you select a horizontal line. And normally what I do is I like to use a red line or a purple line or anything that will stick out to you that you will remember. Pick a color that you will remember, that if you see that horizontal line or your share price getting close to that horizontal line, that you know that is my stop loss. I should be paying attention to what's happening next. Okay, so use that. And obviously we want to get as close as possible to 141.65. In order to do that, you might want to zoom in a little bit. Let's get to 141.60. There we go. 64 is still fine. That's close enough for me. Right. So there I've got my stop loss. Now to remember that that is my stop loss, I'll put an annotation in there. And just make sure if you're writing the annotation that you don't have purple, otherwise your words will be in purple. If you want to put it in purple, you're more than welcome to do that as well. You can change the width of this, or whichever the case may be, but I want to write here, let me just put this in bold, stop, this is my stop loss, and I want to put 15%. I want to save that. So I clearly have a mark which says stop loss 15% with my purple line. Now, if you feel like your purple line is a little bit too thin, you're more than welcome to change the thickness of the line, because that is also possible to do. But I'm just going to leave everything as is. Now, as we said, our initial stop was in the region of about 141.65. Now, I want to say this, you don't need to get right on top of 141.65, but you want to be in the region of that amount. Now, what clearly happened is after we bought the share at 140, sorry, let me just get the crosses here. As soon as we bought the share for 166.65, the share price went up. Now, people do ask this question: when should I adjust my stop loss? When should this stop loss start to move upwards? Well, it's really easy for me to say this. As soon as you see the share price start to make new little highs like this, let me just doodle this for you. So as soon as you see something like this, or you see something like this, or this, I will then start to readjust my stop loss upwards, right? So as soon as the share price starts to make these little highs, since the day that we've bought it, obviously we bought it down here. This is the point where we bought it at, right? Now, as soon as the share price starts to close above the level that I bought it for, I want to adjust my stop loss upwards, because we just said that you can only move the stop loss up, you can never move it down. Now, let's do that. Now, let's recalculate it. Now, I'm going to take this point over here. So for those of you focusing on what I'm doing at this point in time, I'm using this point that I've highlighted for you as my reference, and let's adjust our stop loss. So on that specific day, when the share price closed, now if you want to know when to adjust your stop loss, rather adjust your stops in the evenings when the market is already closed, because then it's easier just to make use of the closing prices. I like to adjust my stops based upon what the closing prices were for the day. Now you'll see the closing price there was 192.64. So what I do is I get my pocket calculator again. 192.64 was my closing price, 192.64. Right, 192.64. I deduct 15%, which I said was my stop loss. Now, a 15% stop on 192.64 is 28 Rand 90, if you want to round that down. Now, that gives me a total amount where my stop loss, this is the value at which my stop loss should currently be. It should be in the region of about 163.74. So what do? We get back here, and I will try and readjust. Now, on the new software, you don't need to draw new lines. You can just actually click and drag the line that you've already drawn. And what we're trying to do is we want to get as close as possible to this 163.74. So let me just zoom in a little bit here. Let's get down to 163. Ah, that's it. We got it almost there. 148. Let's see if we can get us a little bit closer to where we were at. That's it, 163.74. So that's basically now our new stop loss level. And what I can do is I can actually just go and I can just move my stop upwards, adjust it. I don't need to draw new lines. On the new software, you can just click and drag the lines. You can click and drag it. So now I've readjusted it, because since on this day, and I'm going to make a vertical line just for those of you that's trying to follow where I'm at this point in time, we've now readjusted. We bought the share at this point in time when the green line is. Now I'm going to make this line purple, so then you know why I've readjusted at the stop loss. So we readjusted when the share price made a new high over here. We readjusted our stop loss, so you can clearly see our stop loss is now in the region of 163.74. Now, as soon as this horizontal line starts moving beyond the point which you bought it for, and remember, we bought the share for 166.65. This is where the vertical green line is at. As soon as this purple horizontal line moves beyond beyond the point that I purchased for the share, my share is actually now starting to show me profit, right? It's actually showing me that, listen, you're actually starting to move into profit. So let's go through the whole exercise again. And now what we're going to focus on now is this high over here. So we're going to recalculate from this point over here. So that is now at 227.51. That was the closing price for that day, was 227 Rand 51. So I get my pocket calculator, 227.51. I deduct my 15% from that. That means that my new stop loss should be at 193.38. That should be in the region of about that, 193.38. 193, and we want to get as close as possible to it. If it's not possible to get right on it, it's fine. 193. What do we have? That's a little bit still too high. 27. Let me just zoom a little bit in. 83.38. I think the closest that we're going to get here is going to be 27, 55, 41. That's close. That's it. I'm going to leave it on 41. I'm happy with that. Right. So my stop loss should be in the region of 193.38. You can see how close you can get to that as possible. But I'm going to leave my stop loss at that level. So now we've readjusted our stop. Now, if the share price, you'll see here that the share price actually did start to move downwards. Look at this movement downwards. But if you actually go and check that movement downwards, you'll see that that movement never came close to our stop loss, because that was only an 11% drop in price. That was only an 11% drop in the share price. So it never got close to my stop loss. You'll see that's where there's still a distance between my stop loss and where the share price was at. So as long as the share price did not touch my stop loss level, I'm still in the share. I'm not selling it, right? Because that's why I've got my stop loss. Now, as the share progressed up until a certain point, and let's say we recalculated on this last part. I'm going to recalculate it from this point, just so that you know. Ooh, let's make that line a little bit thicker. So we're going to calculate it from this high over here. So now that price was 267.97. 267.97. 267.97. Let me just confirm that. That's it. So that was the closing price for the 13th of March 2016. So we still had the share, because as you can see, the prices never touched our stop loss. Now on that day, on that evening, I got home and then I readjusted. Went and calculated my new stop loss, and I saw that my stop loss level should be in the region of 227.77. if you want to round that down, 78. So let's get as close as possible to 227. I'll keep that on that level. That's fine. 81. 227.81 is still fine. We can try and adjust it a little bit downwards. 65 is just 2 below. 81 is fine for me. Okay, let's leave it at that. Right. So now our stop loss level is at this new level over here. Now you can clearly see that since we bought it, right, we bought it down here on the 17th of May 2016, and the day that the share price hit our stop loss, it actually hit our stop loss on the 5th of April 2017. So on the 5th of April 2017, I would actually have sold the share because it hit my 15% stop loss. Now, how much was the profit that I took from this? Well, you can go and calculate that. Since the day we bought it up until the point when we sold it, we made about 36%. So we still ended up with 36% of profit after we sold out of our 15% stop loss that was hit. Now, just before I end this webinar, I hope you have a really good understanding now of how you can actually implement this manually on your chart, to see how you can use it and always be up to date of how far the share price is from your chart, from your stop loss line. Now, what I want to reiterate is the fact that you should not be using the same stop loss on all your shares. Now, it does not mean you can't use a 15% stop loss on 2 or 3 or 4 shares. That's not what I'm saying. What I'm saying is that you need to go and study each and every individual stock and try and determine the average amount of gain and average amount of loss that a specific share does, to try and get yourself to a point where you try and understand the sort of movements that occur within a particular share. Some shares have large movements and some shares have small movements, right? So on some shares you can use a 10% stop loss, and in other shares it's going to require you to use a 15% stop loss, to make sure that you do give the share enough room for movement. Remember, a share does not move in a straight line. And because it does not move in a straight line, it goes through certain cycle periods. And you need to give the share some room to breathe. But remember, in our lecture modules, we clearly state this, that you should not be risking, for the beginning, more than 15% at a time on your share. I hope you have a better understanding of how to use a stop loss and how you can calculate it and how you can actually visually implement it on your charting or on your charts of the shares that you've bought. If you have any questions, please do not hesitate to phone the support guys on 012-940-0800. Just that number again for you, 012-940-0800. Remember, you can register for this evening's webinar if you thought this was a little bit too quick for you, or you want to do this session again. You're more than welcome. We're going to redo this session this evening, and that's going to start at 6 o'clock. So you're more than welcome to register for that as well if you want to join us for this evening's recap of the stop loss. Thank you very much for joining us. Up until later this evening, enjoy the rest of your day. Bye-bye.